Welcome back, everyone, here to Live Now from Fox. I'm your host, Mike Pache. Thanks again for joining us. Well, it was another big day on Wall Street today for the stock market. The Dow, the S&P 500, and the Nasdaq all hitting their third record in a row. So we want to talk all about that and so much more. I want to bring in our next guest. This is Matt Orton, the Chief Market Strategist with Raymond James Investment Management. Thanks so much for joining us here today, Matt. And, you know, it seems all the time when Nvidia has a good day, it seems like everybody else is going to have a good one as well.
Yeah, absolutely. And the nice thing is it's not just Nvidia anymore. The market itself continues to work. And I think the market's doing well for really two key reasons. Number one is that earnings and expectations for earnings of companies continue to improve. I think you see that by a lot of the deals that Nvidia continues to strike, companies using cash, companies going public. That's because they have confidence in their ability to earn going forward. And I think the other key reason the market continues to go higher is because there's more optimism around the growth trajectory going forward. There's a path for interest rates to come down. That's good for the market. And the economy itself is doing well. Data is starting to turn. It's holding up decently well. So that gives investors confidence in the future for the market and companies' ability to earn in the future.
Yeah, Matt, that's such a good point there, because not only are these big companies blowing out earnings, but then they're guiding so much better as well for the next quarter. I mean, it's getting everyone still super excited.
Yeah, that's 100% right. Because again, what matters most for the markets, Mike, is the projections for earnings going forward. And we just came off of one of the strongest earnings seasons that we've had in decades. And not only have earnings guidance been strong, but guidance for profitability of companies has also been really strong. So companies are making more money despite a lot of concerns, or the concerns that were out there around inflation and tariffs. Companies' ability to weather any problems, I think, is unmatched. And so we're seeing corporate profitability near record highs. And again, that bodes really well for markets going forward. And that's a key reason why I remain optimistic about the investment environment going forward, not just for mega cap tech, which I like, but for the broader stock market itself as well.
Yeah, so true. And what about the news here of this TikTok deal that President Trump is going to be announcing later this week? We saw Oracle get part of this, and their stocks continue to rise. By the way, for Oracle, I mean, when they put out their earnings and their guidance, I think everybody in the world was wishing that they were on Oracle calls for that weekly, because it just blew it out.
100%. I mean, it's so rare to see a stock the size of Oracle go up almost 40% in a single day. But again, that's because they crushed their earnings estimates, guided higher moving forward. And now there's even more optimism around what Oracle can do, because they're going to be central in this deal that we're starting to see unfold with respect to TikTok and China, and U.S. investors starting to take control of the business in the U.S. for TikTok. And Oracle itself is going to control the training of the algorithm, and it's going to store all of the user data in a secure facility so that it shouldn't be able to be manipulated by outside forces. So I think this deal is very constructive, because it takes away some uncertainty that may have been out there with respect to U.S.-China relations. We're seeing, I'd say, Trump and Xi very amicable towards one another. And the fact that we might get this deal signed also signals further progress on the trade front, and wrapping up more of those trade talks, which are absolutely critical for the U.S. and our competitiveness, and really getting a good deal on trade into the future. So I think it's another signal of optimism, and why investors should really be embracing the fact that markets are all-time highs, rather than being worried about it, because there's a lot that I think can go right and will go right down the road for the market.
Yeah, so true. And so from stocks, let's talk about metals, though. I mean, gold is surging as well. Look at that, at 37.50. What's going on with the metals, and why are they rising so much?
Yeah, you know, Mike, I've been bullish on gold for a while, and I've liked it because gold is no longer trading just in a reaction to the direction of interest rates. We're seeing that sort of decouple. And gold has done well because more investors want to own it. We're seeing central banks around the world buying gold and increasing their overall stockpiles. And we're seeing a lot more retail investors around the world also start to buy gold as a hedge for potential risks going forward. And I think that matches really well with owning equities, owning stocks in the market, owning some riskier assets like technology, but complementing that with something like gold that's fairly steady. Even though it's up 40% or so this year, I can see gold getting to $4,000 an ounce or more by the end of the year, simply because there's a lot of strong demand behind it. And I like the fact it helps de-risk portfolios to a certain degree, even more than bonds to a certain extent. So it helps build balance for investors' portfolios.
Yeah, it's really good to see the metals starting to surge again, because I often wonder about this, Matt. Let's just say that crypto wasn't even a thing; it was never here. What do you think like gold would be at right now if there was no crypto? Because I felt like crypto took away a lot from gold and other metals when everything was starting to go crypto crazy.
Yeah, it's an interesting point, Mike, because I think when we first saw Bitcoin, say 2 years ago, really start to rally and sustain a lot of the gains that it made, you saw gold fall to the wayside for a little bit. But I think investors have realized that crypto is its own distinct asset class. It has its own trading characteristics that are different from gold. Whereas gold, I think, is more of a long-term hedge for a portfolio. Crypto is now more of, I'd say, a speculative asset, but it's a risk asset that investors can, again, use to diversify portfolios. But gold and a hard metal like silver, platinum, things like that are really good diversifiers, because while they do have industrial uses, I think a lot of times investors just store it. And so you don't have as high correlation to the equity market. So again, that helps bring down your overall risk in a way that crypto isn't able to do for your portfolio.
Yeah, that's all great things. Great insight there, Matt. Lastly, before we go, any companies that you are going to be looking at, if any big earnings that you're looking at for in the future to take a look at?
Yeah, so I'd say pay attention to what financials report in early October. That's going to be a really good barometer for the direction of the overall economy. I expect numbers to be fairly strong, especially because we have more M&A activity. But I think my favorite name, Mike, going forward is still Alphabet. Alphabet's a long-term winner in the AI trade. It's a long-term winner in the search trade. They have hundreds of billions of dollars of cash and free cash flow that they can deploy for acquisitions. So I think that's a long-term winner that investors are going to want to stick with.
Yeah, no doubt. I mean, when your company is a verb and everyone's using it daily, I think that's a good point for Google, Alphabet, all in the mix there. Matt, thanks so much for joining us on Live Now from Fox. Always great to have you on, and great insight.